Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the stock market as well as the Magnificent Seven stocks. So let's start off with fear and greed. And as you can see with CNN, we are right on the border of extreme greed, and same with pievesting.com. So getting up into those greedy areas. So as I said earlier, do be cautious. As far as crypto fear and greed, crypto is still down in the higher fear area. We're still overall in a downtrend as far as lower lows, lower highs. You can see recently, at least ever since August, that we have been in this uptrend as far as fear and greed goes for crypto. So still sort of an undecided market there at the moment. If you're interested in more crypto content, I do videos every week on Bitcoin mining stocks, altcoins available on Coinbase, Robinhood, the Bitcoin cycle, where we are at for that. So I know a lot of you guys are interested in the content about crypto. But it's also important that we take a look at what the stock market is doing as well, because that affects crypto. So let's get into it. As far as the S&P 500 goes, you can see here with the green and the red dots, I have the buy and sell signal indicator on, and with the daily, we do have a buy signal. So I also have on the Heikin-Ashi candles because I like to see that it kind of cuts out the noise and shows more or less a trend. Now, sometimes these trends can get cut very short, but overall, most of the time when we do get a buy signal, we tend to go higher. So the S&P 500 looking to get past all-time highs that it made not too long ago. Now, you may notice here this red vertical line. That's when the Fed cut rates. And let's talk about this just real briefly. By the way, the white line is just the inflation when it's at its peak. The green lines were the tops of the Bitcoin market that happened before. But you can see here when the Fed cut rates, in 2019, we did go higher. Obviously, we had the Black Swan event with the COVID crash. In the dot-com bubble and the great financial crisis, when the Fed cut rates, you can see that was the top of the market pretty much, and we went down after that. Now, I've been wondering if we've been in a 2019 or 1998 style scenario where the Fed first cuts rates and we do go higher. And I think, or I'm leaning that way, that that is the type of scenario we are in. And we talked about this not too long ago before the rate cuts, but I think it's good that we visit this after. Hindsight, we don't have the benefit of it when it comes to markets, but we are trying to take prior data and apply it to today. Every cycle, something different happens, and I think, at least the way I'm perceiving it, is you guys can see this. When the Fed cuts by 50 basis points, which they did this time around, it tends to be bad for the market in the near term. However, when they cut by 25 basis points, we still have a little bit of room to run. You guys know what happened after 2019 and 98, that a few years later it did eventually go down. But I am thinking, I don't want you guys to get stuck too much on the 50 number, because the Fed isn't meeting in October. They are not going to unless it's an emergency meeting. So they did a 50 basis point cut in September, and they're not meeting in October. That means that they are starting out, this is the way I'm looking at it, they are starting out with 2 consecutive 25 basis point cuts. And they're saying, you know what, let's just get it over with. Let's cut with 50. We're going to start cutting now. We're not meeting in October. So we'll just think of October as part of this cut. And that's why they did 50, because it's really 2 25 basis point cuts. So I'm most interested to see what the Fed does in November. By that time, and we'll see what happens. And as far as different trends that happen into the rate cuts, whether the economy goes into a recession sooner than later, in my opinion, we are still following this dark green line. We did have that 10% correction with the yen carry trade before the rate cuts. And I think if we are to make newer all-time highs, you can see that typically that doesn't happen in recessionary situations, when that comes sooner than later. So that's what I'm looking at as far as the market overall. To me, this does look bullish. You can see where the yen carry trade was right there. And then, hopefully we continue to move higher and get that Bitcoin 4-year cycle, give or take, and still have another year left in the market. So all that being said, guys, the way I'm looking at the markets, one of the things I try to do on this channel is is answer the essential question: is now a good time to buy? In my opinion, for long-term stocks, long-term holds, I'd say I'm feeling more cautious. But if there is another year or so left of a bull run in the markets, then maybe some of the riskier assets, some of the smaller caps, the Russell 2000 cryptos, I think might yield better returns overall than some of the larger caps. The larger caps, I think, are a little bit overvalued as far as right now is concerned. So the VIX, we had the highest VIX spike since the COVID crash and since the great financial crisis. And the way I'm looking at this is we only had about a 9-10% correction here. It wasn't one of these 30% or 50% corrections that happened since the start of the bear markets in both those scenarios. So I'm looking at this again like a dot-com bubble style scenario. It's probably going to be known as the AI bubble. And you can see there was a number of VIX spikes, but kind of like an earthquake, a giant earthquake that happens, there's usually a big one that happens as a precursor before ensuing larger earthquakes. So that's kind of how I'm looking at it, is that maybe we're going to get multiple VIX spikes in this area in the coming years as things get more volatile. Let's go over to the yield curve. So when the Fed cuts rates, the yield curve, if it has been inverted, tends to uninvert. And so you can see here we are moving into the uninversion territory. The red lines here, this time the vertical red lines, were the bottoms of the market. And what you will see is that the bottoms of the market can happen a decent amount of time after the uninversion. So I'm not getting the exact date, but you can see there 547 days, give or take, or 574, sorry. And from over here to the bottom, 616 days. So you can take a look at that and say, okay, maybe a year and a half, 2 years down the road, maybe that's when the bottoms of the market will be coming. In COVID, it was a lot sooner. So I'm not saying sound the alarms now, but what I am saying is do proceed with caution. As far as the unemployment rate, overall, it is still trending up today. I believe the Fed released the updated data. Now, they're always revising it, and many of the revisions are typically negative. So the data, they usually release, as far as the last year, most of the time I've seen them revise the data later and say, well, actually, it was worse than what we reported. But you can see here that the unemployment rate did tick down a little bit. Let's get that log scale on. It did tick down, but we are overall in an uptrend. So if the unemployment's going down, I think that's sort of counterintuitive with the Fed also cutting rates, because they'd be cutting rates to ease pressure on the economy. But if things are all fine and great, then this kind of goes against why they would be cutting rates, or at least one of the reasons. So not celebrating this completely, like that the Fed has dialed in the rate cuts completely and they've fixed the economy and soft landing and everything's hunky-dory. I am still proceeding with caution, as I showed you guys. I think the yield curve is one of the best indicators of upcoming recessionary times. And as far as Bitcoin's concerned, again, subscribe if you want to see videos on that. I'll be doing a live stream later on crypto, talking about Bitcoin, altcoins, and such. But you can see we have been in this downtrend, and the Heikin-Ashi candles you see on the weekly, about 4 or 5 weeks down, 4 weeks up, 5 weeks down, 2 weeks up, 3 down, 2 up, 2 down, 3 up. So it's just kind of chopping sideways and down for a bit. We do have this doji candle for Bitcoin right now. And as you can see here, Bitcoin did have about, at least on the Heikin-Ashi, 13 days up. And then we got this sell signal. I drew this trend line, this diagonal trend line, because it's kind of going along. There's a little bit of a parallel channel here. This other trend line, Bitcoin's been in love with since the very bottom of the bull run. But I did draw this parallel channel to go along with that trend line, and eventually it just came down. So as you can see here on the daily, Bitcoin touched it, wicked down to the 200-day, came up to the 100, the light blue line's the 100, the orange is the 50-day moving average, has a big doji here. So again, that means undecided. So if it's not able to stay there, then I would guess it goes down to the 200, around 60,000, and then maybe makes more of a move down. But if it is to move upward, then you'd be looking at 67,000 to the upside. So let's get into the Mag 7 stocks. Let's start off with NVIDIA. And what do we got for NVIDIA? So NVIDIA, taking a look at this, you can see lower highs. I don't need to draw a trend line. You guys can see this. I see higher lows. And again, I want to answer the essential question, is now a good time to buy? And I've made the case for, if we do have a big correction, that some of these larger stocks, probably not the best plays, especially if they are within 10-20% of their yearly highs. It's just a little too rich for me. So if these are stocks you like a lot, then, and you believe they are some of the strongest stocks in the world, then when they get between the 100 and the 200 daily moving average is a better time to dollar cost average in. So you do see higher lows, lower highs, wedge pattern. If it isn't able to get NVIDIA above, what's it there, 127, then it would probably come back down to this 50-day moving average at 117, maybe even back down to this fib in the 100, somewhere around the low 110s. As far as Microsoft is concerned, lower high, higher lows, again, wedge formation. It does have even a minor higher low from last week to this week. So maybe it's getting ready to turn on up, but if not, you can see the 200-day moving average is waiting for it. And that's not a good thing that it's testing this lower support. Now, again, that if you love Microsoft, not the worst area to dollar cost average in, but it is testing that lower support. If it tests it multiple times, maybe it's just getting ready to break through. And sometimes what I've noticed, whether up or down, third time's a charm. Now, there's another way I look at when to dollar cost average in my favorite stocks. Now, I like to look at the weekly as far as buy-sell signals. Obviously, none of this financial advice, just entertainment is what I like to look at. But the stochastic RSI on the weekly, when it's down here and it flips positive, blue above orange, tends to be areas that I like to get in at. So you can see there, then it's not as overvalued. Other areas obviously being the moving averages. The 50-week moving average is sort of the dividing line between bullishness and bearishness. But again, when we hear bearish, I feel a lot of people with their emotions, they say, well, it's bearish, so this sucks, it's bad. Why would I buy this? It's worthless. Now, those are the times you want to buy. Those are the better deals. So you want to take a look at these stocks as if they were on a discount. And when it's bearish, you want to be bullish. When it's fear in the markets, you want to look for opportunities. So don't let the negative words, negative emotions psych you out. Those are the times to be greedy. Let's go over to Apple. And as you can see here, yeah, look at that. The stochastic RSI showing pretty good opportunities to buy. Now, it's not as deep here. And as you can see, Apple is near its all-time highs. So maybe it's higher lows, lower highs, same story. So maybe it's getting ready to push through those all-time highs. Now, you guys who've been subscribed to the channel, you'll remember we talked about when Apple was down here at the 100-week moving average. I said that this is a rare opportunity. And as far as Apple stock's concerned, it's only down at the 100-week moving average about once every other year. So you might have to wait another 2 years for it to get down to that area. So that's why we have on the moving averages. I also do the Fibonacci's, the buy-sell signals. Let's put that back on. The buy-sell signals tend to go along with the stochastic pretty decently, but you can see here we drew the fib from the low to the high. Apple came down candle body-wise at 382. If you're lucky to get the wick down there at the 0.5 at around 197, congrats. But it looks like there's some positive momentum there. Maybe it's getting ready to break and make new all-time highs. So we will see. As far as Amazon, again, lower highs, macro, higher lows. So a lot of these are wedging up. Amazon, you can see here on the weekly. I was wondering what was going on here, if we were going to keep getting up into the all-time high territory. But you can see the weekly, it tested off the former all-time high from way back and had a little bit of rejection. So let's zoom in on the daily, see what's going on. All right, so a little bit clearer of a picture. Amazon got some strength back in it, bounced off the 200-day, came up here, lower high, okay, bounced nicely off the 100-day moving average. So no buy signal on the daily yet, but if this momentum continues, great. If it's not able to continue, you'd say maybe look for a possible rejection here about 189. and then possibly back down to the 200. So we'll see. A lot of these stocks are wedging up. Again, another one, Google. You can see this one was pretty weak. So 1, 2, 3, 4, 5 waves down. That's an impulsive 5-wave move for all you Elliott wave fans. And then came down even lower to its former all-time high way back when. So this fib, by the way, a couple ways to draw fibs: low to high, if you're in all-time high territory, or you could draw it from high to low if the price is between that. Now, sometimes I like to do that because if you take that fib, the high to low off log scale, you can see these extensions, and you can see Google was trying to get up to the 1618 and then sold off. So that's what happened there with Google. Almost got up to the 1618. It's still the target, 193, and if it gets through that, sky's the limit. But right now, Google had a little bit of a daily sell signal, now a buy signal. So it's set up nicely. It's made good support off the 100 and the 50-day moving average, and maybe it's getting ready for a big move up. So you could say 1, 2, 3, 4. Could we be getting ready for a 5-wave impulsive move up? Again, don't trust my Elliott wave analysis. It's still very new, but I'm trying to learn. I try to take on some different analytical sort of things for the markets, as far as just trying to be able to read the wave patterns and stuff. But again, don't trust my Elliott wave. The moving averages, the stochastic. As far as just trends in the market, I think I'm a little bit better at that. Meta is durably pushing into all-time high territory. So again, we drew this fib from the high to the low, and once it's able to get through that 1618, which it just did, is it able to keep pushing on up? Does it have further upside? So you can see here that the 2618 is all the way at 864. So if Meta is to all of a sudden get very strong, then that 864 area would be the target. So we'll see. Let's zoom in on a smaller time frame here. That's looking pretty positive. And Meta overall, I gotta say, like, I don't understand it. To me, I see more value in Apple, Microsoft, Nvidia, even Google. But Meta, for some reason, the stock for all the old people on Facebook, it's doing pretty well. Only coming down to the 100-day moving averages before having some nice moves up. So Meta doing good. And lastly, let's go over to Tesla. We're in crypto. Let's move over to stocks. So how has Tesla been doing? All right. So Tesla, some lower highs here. Well, it did make a higher high here, so that's not bad. It is making higher lows. So I am liking this for Tesla. Now, it did have this little negative move downwards. Tesla, man, it's just so volatile. And if you guys are ever interested, take a look at some of the trading charts from each day. Nvidia, even Tesla, tend to be some of the top traded stocks, and I think that's what artificially pushes up their value way more than it should. But you can see this trend line moving on up, so probably lines up with one of these moving averages right over here, the 100 or the 200. So Tesla, maybe it'll come back down there. If it isn't able to hold support at this 618 fib, then you can see one of these, maybe the 100, the 200 at around 214 for some possible deeper value on Tesla. So again, Tesla, it went down to we have to go to the monthly, I believe the 100-month moving average twice recently, but it is having a nice move up, and it's breaking out of that lower high wedge channel there. So I think if we are to get into a bubble territory, Tesla might be one of those that just explodes up for some reason. So overall there, if you're holding Tesla, you want to see it get above 270 and keep moving on up. Now that's on the weekly. On the daily, not as much strength at least yet, but maybe it'll come back down to these levels. Anyways, guys, hope you enjoyed the video. Stick around. In a little bit, we'll do a live stream and talk about crypto. So thanks for watching. Hope you're all doing well. Have a happy Friday. Take care.